Benchmark, the voice of business. Presented by LMD.
On this edition of Benchmark, Stefan Abeyesinhe, Director and Group CEO of Asia Capital, joins us on the program today to give us his perspective on Sri Lanka's capital market landscape. Up next, Sharang Pant, the Managing Director of Nielsen, reviews the sharp drop in the LMD Nielsen Business Confidence Index as the BCI sheds 25 basis points. And the final word goes to LMD's columnist Shiran Fernando as we discuss Sri Lanka's macro outlook. That's the lineup for Benchmark.
Welcome to Benchmark, the Big Picture Business Program. I'm Savitri Rodrigo. In the hot seat today is Stefan Abeyesinhe, Director and Group CEO of Asia Capital, and he's going to be continuing our discussion that we've been having on capital markets. Ahead in the program, we hope to tackle some of the pertinent issues, including the market reactions to the Budget 2019 proposals, the new Securities and Exchange Commission Act, as well as the recent changes that were implemented with the launch of the Empower Board, the Multi-Currency Board, and a delivery versus payment system. So, Stefan, welcome to Benchmark.
Thank you for having me, Satri.
Currently, how do you view the capital markets here in Sri Lanka?
To be honest, we've had a very interesting few years. The capital markets are not being used to its maximum potential, but that's pretty common for any country of our standing, which is not exactly a bad position to be in. I mean, we have major opportunity. We've got so much more growth potential. The capital markets, I think, one thing is we are very limited in products and resources. So we have the bonds, we've got listed equities, and that's kind of it. That's all we have. So our stock market has been very slow for the last few years due to maybe political turmoil. There's always going to be a million reasons. But saying that, I feel that our capital markets have very good infrastructure. We are in a good place. However, obviously, strengthening of policies and all of that need to come into play to capitalize on what we have thus far. Yes, we would like a lot of support, but there's a limit that we can also expect from the government because they've got enough issues to deal with. Capital markets can be good enough to change your economy overnight if we play the cards right. So I feel we have a long way to go, but we are definitely on the right track. We are slow, but I feel we'll pick up. I don't think there's too much to worry about. I just feel our capital market needs a bit of guidance. I think the SEC and the stock exchange have done good. They've put in some policies. I can see it growing. And however, we need to convey that to the outside of Sri Lanka, the foreign investors, to kind of bring them back in.
So we've been seeing some changes, the Empower Board, the Multi-Currency Board, the delivery versus payment system, all these things coming in. What's your take on these recent changes that have been implemented in the market, these initiatives?
Look, I'm always a very optimistic guy, so I just think the initiative is very good. We've had this existing capital market structure for well over 20 years. And the new boards coming in, all of that is just new incentives, and it gives a lot of companies a new opportunity and new options to come list, raise money. The SMEs will have new options to raise money. Multi-currency, companies that earn in USD, Euro, whatever, they can list and kind of hedge their risks against the currency depreciation. So I just think they've got the products. These are new things, new options for everybody else, but people don't even know about it. So I just feel that they need to either educate the business community along with the foreign investors who are coming in so they can tie in and kind of expand on their exit strategies when they come in here. Because we always look at major problems like, okay, the depreciation is one thing we always talk about when there's an investor coming in. We look at exit strategies, which are basically listing or maybe a complete exit. But having these new boards essentially double your chances of a successful exit. It increases your hedging against currencies. So all of this really helps. So I mean, we've talked about this to our investors, but I still don't think that there is enough being conveyed to the market out there.
Now, the market didn't fare too well with the budget when the budget 2019 proposals were being read out.
Yeah.
How has the market actually reacted now that the proposals are out?
I think the truth is that the market's not sure if the proposal comes in, whether they're going to carry through it or not. Because a very good example is this VAT on apartments. Last year, it came out in the budget. I mean, we are doing a big development in Colombo with apartments. So, I mean, we put it out there saying we're going to charge VAT from the 1st of April 2018. A lot of people came, signed SPAs. And then for 12 months, nothing happened. So after that, the developer and the investor has to deal with the fact that, oh, what happened? You forced us to sign these things. We kind of ran and put in money. And then 12 months later, so there's no recourse on it. So, and now they've applied the same rule again. So firsthand, I can tell you, the sales team and the marketing team, they're like, how can we go back and say the same adverts in the paper, same things, because we are not sure whether it's going to carry through or not. So that's just an example. Look, I actually think this was a decent budget. I don't think this was a bad budget or this was aimed at getting a particular problem off the table. I don't think that. I think it's a good budget. I think we can work with this. But whether it's good or bad is irrelevant if it's not consistent. So either we be consistent or we really have to figure that out.
Stefan, just taking off from that about consistency in policy and the general big picture, is there adequate focus on actually addressing the capital market weaknesses? Now, the ADB report highlighted that the stock market's lack of scale and liquidity are major challenges. Does the big picture actually see our weaknesses, and is there adequate focus to address these?
The level of focus, unfortunately, has to come from the regulators. Look, once again, I really do think they're doing the best they can in the current context of things. However, yes, more focus is definitely needed. And the ADB report, I saw that, and very clear when it comes to scale, to size. And honestly, until we have some major government companies getting listed, Sri Lankan Airlines, CB, those companies, ideally, or the banks, should have 5 to 10% listed. That will change the scale of our overall market. And when it comes to focus from the SEC and the CSE, I think they are going on the road shows. They are bringing light to the fact that we have a very good functioning market with great infrastructure. But to cut to the chase, yes, they need to focus a little more. They've got some great people. These guys have years of experience. They're educated. They've got the right people in the positions. That is what the government has brought in. And I really think they should be given the free hand to kind of move forward with it.
What are the global trends that are impacting both frontier and emerging markets like ours?
Well, political, economic, and socio-economic, all three impact us directly because we are, I hate to use this term, but we are a parasite nation. That is all developing countries are. We have to leech on to everybody's misfortune and everybody's fortune. That is just how it works. So, yes, an earthquake in another country impacts them horribly, but it impacts us positively. So that's just how the world works. It just goes back and forth. When we get hammered, they benefit. So people don't talk about stuff like that, but that is essentially what it is. So tourism, agriculture, services, that's all we have. And when it comes to countries like the US, like I said, the US government is not necessarily good for the US at the moment, but it is very good for us because their embargoes with China and their agreements with China falling apart is helping us directly. This is not even indirect support. This is direct support. Our industries like rubber, manufacturing, those are exploding purely because we are getting that money, we are getting the services, those jobs are coming to us. And our unemployment is at 4.4. It's brilliant. It'll probably go to the 2 to 3s. Those are major economic factors that show the country's growth. More importantly, the country's potential. So we have some of the most intelligent people on the planet. We can do services. Our companies like Virtue, Samlin, MIT, look at what these guys are doing. It's incredible. there's no reason why we can't be a country like Israel, of a GDP of 40,000, and they've got 9 million people or something. So it's pretty impressive. These global trends do affect us, directly or indirectly. I don't think there's a trend that doesn't. So we should either just identify the major ones and capitalize on those. That's
a good formula to follow.
I really think so. I mean, it's obvious, but a lot of people miss it.
So we're in for a commercial break. We asked Stefan Abeyesinhe after the break for his perception on investor confidence in Sri Lanka, and also about the policies and reforms that are required for our capital markets to move into the future. Stay with us.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal. LMD podcast now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
$8,500 done. 1,500 to go. Hoorah!
What on earth are you doing?
I'm making money.
You're crazy.
Crazy for money. 10,000 steps done. Who the man? I do it every single day. Show me the money.
So you run 10,000 steps every day, huh? You must be fit.
Some days I do 20,000. Hoorah!
Thank you for staying with Benchmark. We now resume our conversation on capital markets with Stefan Abeyesinhe, Director and Group CEO of Asia Capital. Stefan, proposals in the new SEC Act include the demutualization of the CSE and the mandatory compliance code for listed companies. What is your opinion of these proposed provisions in the SEC Act?
First of all, they're absolutely needed. I don't think that's up for debate. And it's high time that they actually got implemented, because the regulations have been in the making for a long time. The demutualization is been on the cards for 5 to 6 years now, I think, at least. But it's a difficult process to actually execute. So, but I really hope they do, because that is going to change the market as we see it. The stock brokers, the investors. I think Sri Lanka has something like close to 1 million CDS accounts. That's 5% of the population. That's exceptionally high. That's really good, but the active traders are only about 10% of that. So things like this will bring in more activity to the market for sure. And the policy and the procedures for listed companies, I know for a fact they're already implementing these. Things like having the minimum public float, things like following up with the accounts and regulations, things about especially notifications to the stock market, those things which have been either put into loopholes or just conveniently forgotten or gone unpunished. It seems very small, but in the scheme of things, when we become a bigger, stronger market, these things will go a long way. And all of this directly plays out for investor confidence. May it be local, may it be foreign. So I think they're very good, but they just need to follow through. Demutualization, like I said, I don't know how or when they'll do it. But the other bits, they definitely are. They're pushing the list codes to really follow up. I mean, being at one, I know that the SEC and CSE are in touch with us almost every week, every day. And the slightest thing, they're on it. They will follow up and say, look, you need to follow this, agree to this, because their main job is A, safeguard the investor, and B is make sure the company follows the regulations and are safe too. So I think it's a very good thing.
It's nice to know that an industry has that much of accountability and transparency also.
Absolutely, because we are dealing with shareholders' money, We are responsible via the boards and the chairmen, but as soon as there is the stock exchange, there is a SEC, when there are central banks watching over you, number one, as a company, you automatically stick to a set of rules, which makes it a lot easier to work to. And also, for us to go and raise funds from overseas, to talk about projects, to raise money from direct investors, when you're listed, all of those regulations really help. So we tell them, look, we are governed by all these bodies. So it's easier for you to work with us. So we have to use that to our benefit also.
Good selling point.
It really is. That's the advantage of being a listed company, not just raising money off the IPOs. Afterwards, why do you do all the work? Why do you have annual reports? Yes, it is to support your existing shareholder base, also to increase confidence in your company and to market it well. So why not use it?
Recently, Central Bank Governor Dr. Indrajit Kumaraswamy said that FDIs are stabilizing. The IMF has decided to give us that extended fund facility, and also the Central Bank raised $2.4 billion in international sovereign bonds. Now, all this sounds very good. What is your personal opinion or perception of investor confidence in Sri Lanka?
I just think Sri Lanka is a great story overall, and for some miraculous, fortunate situation, we are in a location which China wants us, India wants us, the US wants us. So our sovereign is pretty much, gilt-edged. We are fine. Our sovereign is gold, so we can always raise money, because it's pretty simple. Somebody else is going to come and buy our bonds if there is a call on it. That's what's happened so far. So when it comes to investor confidence, yes, the central bank just raised $2+ billion. That helps us raise private equity, because that immediately strengthens our sovereignty. And we say, yeah, we've raised X amount of money from central bank, which will keep our dollar hedged to the rupee at a certain price for a certain time. So if other countries are having faith in our sovereignty, you should too. So that is what I feel. It helps in the overall market overview of the country. When it comes to debt to GDP ratios and stuff, of course, we are on the higher side of things. But we don't have. What do? It's about making the best of what it is. So, yes, the taxes, I think, have to be around this area. But investor confidence doesn't necessarily come just from that. We are far from being a Argentina or a Greece. But obviously, news reports and press will say things. But the IMF and the ADB and the World Bank, they don't just go lending money if you really don't have a capacity of paying back. So they've done their own studies, and I think all of that goes a long way.
Now, Sri Lanka has fulfilled one of the 17 conditions laid down by the ADB to receive that second tranche of $125 million as part of the Capital Market Development Program. How would the development of our capital market be encouraged to promote economic growth?
I would think SMEs would play a big role in that. I really think we need more banks and finance companies to look into niche lending. I'm not talking about there is also a lot of angel investors out there. The finance companies don't necessarily look at that. Our services also need a little bit of backing. There's so many startups which require funding, and yes, there's a massive risk element to that, but that's why central bank is there. Central bank can govern, they can put some regulations, but ADB is willing to fund the growth of capital market. They are not funding the capital market. So what ADB wants us to do is utilize the money, sell ourselves so much better, where we raise multiples of billions coming into the country. So that in turn is just going to create the economy that's going to create individual money in people's pockets, which is new money, not so small things like industries like manufacturing, brushes, brooms, all that small things. they need to be given credit in order to develop the industry, which will intend then grow into a larger firm which somebody will come and buy out and list it. Now that is a very childish way of explaining it, but that's essentially what it is.
But you know that the biggest hindrance for SMEs is the bank.
100%. I'm completely aware, and that's why I honestly believe that the finance companies have been doing a decent job. I mean, we've owned and run a few finance companies, and the SME repayments are always on time. We had so many loans for three-wheelers and small cars who do Uber, who do regular taxi rides. Payments are pretty much always on time. So they don't even, there's no trouble, but it's just that they don't meet the KYC requirements. So the banks struggle to lend. So I guess they need to find ways and means around it.
True. As a final question, what are the prospects that you see for Sri Lanka's capital market in 2019?
I think they've got a few roadshows lined up. I think that's really good. I just really hope that just one or two large government entities even discuss the possibility of supporting the capital markets. A hint of one of the banks, just even a subsidiary coming in. That's the hope. And also we are really pushing for the tourism boost we are on. Unfortunately, we had a small hiccup late last year, but these things happen. So Sri Lanka happens to be on this major high when it comes to tourism, and we should never underestimate that, because that could change our country in a matter of a decade into something ridiculous. We could really become something special, and we are on track. So if the capital markets align themselves with a couple of industries, tourism, manufacturing and energy, for example, and then if the capital market regulators work with the infrastructure developers and kind of tie it together, I just think a hint of that would really take us forward in 2019.
I like your master plan. I just hope someone listens to it and
I'm
takes
hoping.
note.
I hope someone watches this and, some bells ring. Yeah.
Thank you so much, Stefan.
Thank you for having me. Pleasure.
So we've been chatting on capital markets with Stefan Abeyesinhe, the Director and Group CEO of Asia Capital. On the other side, Anushan Selvaraja brings you more.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal, LMD Podcast, now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
$8,500 done. 1,500 go. Hoorah!
What on earth are you doing?
I'm making money.
You're crazy.
Crazy for money. 10,000 steps done. Who the man? I do it every single day. Show me the money.
So you run 10,000 steps every day, huh? You must be fit.
Some days I do 20,000. Hoorah!
Welcome back to Benchmark. I'm Anushan Selvaraja. Now for a closer look on the latest on the LMD Nielsen Business Confidence Index. Joining me is the Managing Director of Nielsen, Sharang Pant. Welcome back to the show, Sharang. Now, how has the BCI performed lately?
So, Anushan, we see a different trend coming up in the way the BCI CCI is moving this month. Usually, before the announcement of budgets, in the past we have seen the BCI move up significantly in anticipation of certain policy changes, favorable news coming in from the budget. But this year, the BCI in fact has dropped before the budget was announced. So the survey was in fact conducted a few days before the budget was announced. we've seen the BCI drop to 90 compared to 115 in the previous month of February. Now we feel there could be two reasons to this. One is the GDP performance for Q4 was announced just before the survey was done, and we saw that the quarter 4 ended at 1.8% growth. That was one of the lowest growth we've seen for many years now, with the annual growth also only clocking about 3.2. So that's one main reason. The other reason could be with the political instability of Q4 and the fact that the elections are coming up very soon. The business leaders were trying to gauge which way the budget will go. Will it move towards a populist budget, or will it be a real good budget like the blue-green budget of 2017? So that's where we feel the anxiety has pulled down the business confidence index. However, if you look at other indicators like the export performance, which has been good, import growth was held on because of certain policy changes in the last quarter of 2018. So on that front, in fact, the country did well. Even in terms of the fuel prices or the currency exchange value as such, that was very much in control. So we feel this change or variation in BCI is more because of anxiety rather than driven by any other macro indicators or micro indicators.
What do respondents have to say about our investment climate then?
So companies are still looking at investing, but not many leaders as such. Only about 10% of the leaders feel this is still a good time to invest further, which could be a reflection of their overall perception or feeling about the business growth or the economy growth as such.
How do they perceive both the short and the long term as far as our economy is concerned?
So there are two trends that we are seeing. There's one group, or 1 in 5 respondents still feel the economy will do well in the next 1 year or so. At the same time, about 55% feel the economy might go down. So there are diverse trends that are emerging on the expectation for the economy. Coming to business performance, over there the sentiments are slightly on the negative side. So about 1 in 3 are feeling that the business will grow. The remaining 65% are not very confident about the business performance as such. The reason could be, while there are certain steps being taken which will strengthen the economy in long term, the short term demand is still under pressure, which will impact the short term projections for the business performance.
Has there been any change in what they perceive to be the most pressing national and business related issues facing the country?
So nothing new in terms of concerns are coming up, but the difference is the quantum. Last month also I mentioned that the percentage of respondents talking about inflation or higher taxes has come down. So is the case this year. So from an average of about 100% 3-4 months back, it came down to 70-75% last month, and about 50 to 60% of the respondents call out these as the major concerns. So number 1, number 2, number 3, the concerns still remain the same, but just that lesser or fewer leaders are now talking about it.
Thank you very much for joining us, Sharan.
Thank you.
That was the Managing Director of Nielsen, Sharan Pant. We'll be right back after a short commercial break. Stay tuned.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal, LMD Podcast, now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
Welcome back to the show. I'm Anushan Sarvarajan. Now we're going to take a look at our economy, and joining me is economist and LMD columnist Shiran Fernando. Welcome back to the show, Shiran. Now, in the April issue of LMD, you said that the Central Bank of Sri Lanka has reduced the statutory reserve ratio, or SSR, from 6 to 5%. Now, what are the implications of this?
So that was the second cut they actually did in quite a few months. So even in November there was a cut that was seen. What that implies is the tight domestic market liquidity that was there, and that upward pressure that was putting on rates. So I think central bank just had to cut it so that there was a release of about, I think, 70 to 80 billion. Total with the two cuts, about 150 billion has been released to the money market. What that basically means is, reduce the pressure that is there on interest rates, the upward pressure, and make sure that things are more stable. Why they had to do it was largely because in January the 1 billion sovereign bond issue was refinanced using reserves, so there was a bit of pressure on the money markets and the overall liquidity situation. So it was, I think, a temporary response to it, but it does highlight the fact that the central bank is caught between trying to ease pressure in terms of some of its money market pressure and also the overall growth outlook, but also doesn't want to just cut interest rates because of what's going on growth-wise, because you have to also factor in where the global markets are and factor those conditions as well.
Now, this is going to be a very event-filled year, so to speak, politically and otherwise. What are the challenges you think the economy will face?
Numerous. So I think the main thing has been, at least over the last 3 months, we've regained some of the lost macro stability that we faced because of the political instability in the last quarter of 2018. So you've seen the rupee doing much better, moving from about 182 to 176. Some of the interest rates also stabilizing, and overall a bit more of a better business confidence environment. But I think the next 2 quarters will really need to be looked at in terms of creating a buffer, because come the last quarter and maybe the next half of the half of next year, with the election cycle due, there could be, the economy may not be really in focus. So that buffer needs to be really built up, and I think in that sense the central bank has been proactive, going out to the market, trying to also arrest some of the growth situation, because the growth numbers also are quite low and not good enough for an economy to grow out of some of its debt problems as well.
Now our currency has appreciated slightly. Now, where do you see it going throughout the rest of the year?
What we saw was both a bit of a correction, because I think the 19% depreciation last year was a bit overdone, an overreaction. So I think part of that is a bit of a correction. Part of that is also more stability with the inflows coming in, and inflows also coming into the bond market, because emerging markets have done a bit better. But right now global markets are quite mixed, because you have concerns on one side of maybe a recession, a global recession, or at least in the US. Then you have concerns over Brexit, which is also having concerns, putting concerns in terms of trade and whatnot, and the US-China trade war, which right now looks like there might be some sort of a deal or something that'll calm markets. So if that environment turns, then once again emerging markets will not be beneficiary, and we might once again see pressure. But in the near term, I think this trend of stability or appreciation could continue. But I don't think it will be a theme that will ride on during this year, because the currency will be sensitive to both imports as well as the external environment.
Thank you very much for joining us, Shiran.
Thank you.
That was economist and LMD columnist Shiran Fernando. Thank you for watching Benchmark, and we hope to see you again next time.